All right, so next up is part C, so the income and expenditure account for the year ended 31 December. So this is just going to be list of income added together, list of expenditure added together, subtract them from each other, and that gives you like the profit for the club, or what's usually just called excess income over expenditure, because clubs aren't profit making. So you have a receipts and payments account. This is going to be like the basis for your income and expenditure. So receipts are income, payments are expenditure. But remember, these are just movements of cash. Your income and expenditure then will be slightly different. Okay, so we might need to adjust some of these figures a little bit. Okay, so let's just go through these receipts. 3,200 cash at hand. That's just the money you had sitting there at the start of January. All right, so that's not income. That's just sitting there from last year, so we're not going to do anything with that. Investment interest of 1,800. Yes, okay, that's income. So let's put investment interest in, and that's 1,800. Sorry, I'm doing that. Sorry, it's 1,800. That's what your income and expenditure account will look like. So just two columns, heading income and expenditure account year ended 31 December 18, and then income, investment interest. Next thing I have here on the receipt side is bar sales. So yes, they're income. But what you will put into the income and expenditure account as much as possible is receipts with corresponding payments netted off. Okay, so you take bar sales and you take away purchases. All right, we've already done that. Okay, we've got profit for the bar, so that's what we're going to put in. So rather than putting in bar sales as income and bar purchases as expenditure and worrying about stock and stuff in your income and expenditure account, I've already done it here. Okay, so I'm going to put my bar profit 16,600 in as income. Okay, so income, bar profit 16,600. So this income and expenditure account is like for the entire club, so I'm just bringing in as income the profit that one part of the club makes. So next I've got club lotto receipts. So yes, that's income. You'll see over here on payments you've got lotto prizes. So receipts take away prizes is what I'm going to put in as income. So as much as possible net stuff off against each other. So rather than putting in a 63 in income and a 38 in expenditure, I'm going to subtract them from each other and put that in as lotto. So 63,000 from the income side, take away 38,000 from the expenditure side, and that is 25,000. Next thing I've got is subscriptions. So that's club memberships. Okay, so that's going to be income for the club. All right. So one thing I should have done before starting to go through income is go through these adjustments just to make sure none of them affect income. So bar stock has gone into the bar trading account, so I've dealt with that. Bar creditors has gone into the bar trading account, I've dealt with that. General expenses due 3,100. So over here in the payments, I've got general expenses, so I might need to adjust that before I put it into expenses. Subscriptions due 2,100. Yeah, so before I put this subscriptions number in, I'm going to need to adjust it in some way. Then I've got depreciation and depreciation. So depreciation is not a movement of cash, so it won't be here on the payment side. So you need to insert that yourself when you get down to expenditure. So subscriptions. So like I said, this is income for the club. It's the membership fees that the members pay. So the starting amount is 72,700. Included in that is so we had membership subscriptions prepaid of 1,800. So what do I do with that? So that was subscriptions people paid last year, but they're for this year. So they are 2018 subscriptions. So they should be included in my subscriptions income this year. So this 72,700 is all the cash I've received for subscriptions this year. It doesn't include this 1,800 cash received last year. That's for this year. So I should add that 1,800 on to subscriptions. And then at the end here in the adjustments, it says subscriptions due were 2,100. So they're due at the end of the year. So they're for 2018. But I haven't actually received them yet. So if I haven't received them, they're not going into receipts. Okay, so this is only when I actually get the cash do I put stuff into receipts. So this 2,100 isn't received this year, but it is for 2018. So that 2,100 should go into subscriptions as well. So I'm adding that 2,100 on as well. So the 1,800 there and the 2,100 both get added on to subscriptions. All right, because they're not included in the 72,700 in the receipts, but they are for 2018. So when you add those three numbers together, it's 76,600. And then I'm on to annual sponsorship, 14,000. There's nothing to net off against that, so that's going in. Annual sponsorship, which is 14,000. All right, that's all the income in the question. So I'm going to add those together, and it gives me 134,000. Okay, the lotto and the subscriptions, I'm kind of doing that just in brackets after the entry. If you want, you could do a separate working down at the bottom of your page and reference it up there. That's up to yourself. It's not kind of, it's not taking me a huge amount of space to do it, so I'm just putting it in brackets is why. But if you want to do a separate working, you can. So that's all the income. So on to the expenditure now. So less expenditure. So my starting point for this is going to be the payment side. Club Lotto prizes I've already put in. I subtracted from Club Lotto receipts. Bar purchases is in already. That was set against bar sales in my bar trading account. I've put bar profit in, so you don't need to put that in again. General expenses, 23,800, and I put a little star beside this because general expenses due were 3,100. So again, this is just the money paid out for expenses in 2018. There's also a 3,100 due at the end of the year. So I must have incurred expenses of 3,100 in 2018 that I haven't paid for. So if I haven't paid for them, they haven't gone in there. But if they're for 2018, they should be in there in the expenditure section. So my expenditure for general expenses is going to be the 23,800 from the payments plus the 3,100 due at the end of the year for 2018, but not included in this number. So when you add those two together, you get 26,900. Next up, insurance, 5,200. Nothing to adjust there, so just straight in. Next, so purchase of equipment. Equipment, remember, is a fixed asset, so that doesn't go in an income and expenditure account, which is just like a profit and loss account. That is going to hit the balance sheet as a new asset that you own, so that doesn't go in as a payment. Cash balance then at the end of the year, no, that's the amount of money you have sitting there at the end of the year, so that's not a payment. All right, that's going to be your cash in the balance sheet. All right. So all the payments are done. I've dealt with those two. I've dealt with that. I've dealt with that. Depreciation then. So I have two amounts of depreciation to put in as expenditure. So it says depreciate the clubhouse at 3%. So the clubhouse, I'm told all the way up here, is worth €620,000. So clubhouse depreciation, and that is the cost 620 by 3%. So if you multiply 620,000 by 3%, you're going to get 18,600. The next one then is equipment held on 31 December 18 is to be depreciated by 25%. Little kind of reminder there on 31. So reminding you that's the equipment you have at the end of the year. So at the start of the year, on the 1st of January, you had equipment worth 32,000. But don't forget here in payments, you bought new equipment worth 3,400. So you need to add those together. That's the equipment you own at the end of the year, and depreciate that by 25%. So equipment depreciation is going to be the 32,000 you had at the start of the year plus the 3,400 you bought, and then 25% of that. So add the two of those together and then get 25% of it, and it's 8,850. And you could do that one as a working then as well. If, it's kind of tricky to maybe fit it on one line, but you could do it down here and then just reference the working. So that's all the expenses you have. So you're going to add those together. And it's 59,550. So 59,550. Income less expenditure is 74,450. And usually in kind of sole trader or company, we'd be calling that net profit. We tend to we don't use the word profit because clubs are not profit making, okay? So we just say that's an excess income over expenditure. If it was negative, then it would be excess expenditure over income. All right, so that's your income and expenditure account done.